welcome to the 31st episode of the One Bite at a Time show. This is where we go out and find the best information you need right now in this market today to be successful in real estate. And also, don't forget, at the very end of this show, there's a market update. If you don't need anything else, you can forward right straight to the market update and see some great interest rates and what's going on with the market. So today's event is a 5-minute video, and it's going to be about the non-QM products, and more importantly, the bank statement program. Now, some of the bank statement programs are not really non-QM. They're actually Fannie Mae and Freddie Mac, and they are another way in order to be able to calculate income for the self-employed. But remember, two things you need to know about a bank statement program. Number one is they're for the self-employed. They're only for the self-employed. Number two is they always come with a haircut. So depending upon the type of business, the underwriter has a chart to determine how much of a haircut they need to take off of the income from the bank statements. So for example, some businesses like a hairstylist, they don't have a lot of expenses, so they're not going to have as much haircut. Another type of a business is maybe manufacturing of something, or where there's going to be a lot more expenses involved, and the ratio of income or profit is going to be different over the gross numbers coming in. So underwriters make those decisions. The second thing you need to know is that there are 4 stages of the bank statement programs. Now, why is that important? Well, there's going to be a different price, a different interest rate, a different price for the borrower. So for example, the first one is a good one, and that is 12 months personal bank statements. And that's fine. 12 months personal bank statement is going to be the highest rate, the highest cost to the borrower. The second one is going to be 24 months worth of personal bank statements. Be a little bit less cost, a little bit lower interest rate, but not much. I call those first two truly non-QM products. And the reason that is because if a business owner doesn't have a business account and they're commingling their funds, they're going to consider that less of a business and more of a hobby. And we find that a lot in the industry, people who are self-employed and Schedule C, and they run everything through their personal accounts. That's what we used to find that killed the deals all the time. Now, of course, we do allow personal bank statements, but they come at a higher rate and a higher cost to the buyer. The better program is the 12-month business bank statement program. That's going to come with a better rate and a better cost. And of course, the last one is 24 months business bank statements. If an underwriter can average the income over a 24-month period of time, of course, that's what they really like to do. Some people think the 12-month bank statement program, both of them, are non-QM, and both of them that are 24 months are not non-QM. But it's kind of different. Every lender's a little bit different there. That's why we shop around and find the right lenders to meet your client's needs. So understand the very best one and the best interest rate and the best cost as far as the borrower is concerned is a 24 months business bank statement program. Still got to get a haircut based upon the type of business. And that's also why we hear very different interest rates associated with the bank statement program. Some people will say, well, I got a great rate, and some people got a really high rate compared to the normal standards of the day. But that's really based upon which stage the borrower fits in. If they have 24 months business bank statements and we can calculate an income, take a haircut, and do what we have to do, that's the very best way to do a bank statement program. That's it for bank statements. 5-minute videos. Remember, there's a market update after this, so you can forward to that. I'm going to end this with a little real estate humor. Have a great day, and we'll see you next week for episode 32.
Excuse me. Is that apple for sale? Yeah, we're about to put it on sale right now, actually. Well, I'm in the market, so tell me about your apple. Why should I buy it? Nice try. Okay, people, here's how this is gonna work. I have an apple here. The highest bidder's going home with this. I want all bids in the next 2 minutes, then we're closing it. Bidding starts at $5.
Feeling pretty confident there, huh? I mean, don't you think...
$10.
He said starting at 5.
15.
Is this a new apple?
Yeah, just listed. I'm pre-qualified. I'll pay cash. I got cash. 20. 30. 40. No, just make it 45.
Is it even worth that?
50. I don't know. Please, this is the 8th apple I've tried to buy.
Could I at least see it up close?
Nope, it's an apple. You know what it is. You either want it or you don't. I'll take it for 100.
What? I'm from California. It's the cheapest apple I've ever seen.
120.
Why did I do that? Why? I don't.